that's your scorecard as we get up and running for this Thursday day of trade. It's, as I said, a bit of a mixed picture off the back of finally getting an end to this government shutdown. So let's get to Kevin Green now, who joins me to talk about this. So it's finally over now. What do you make of what we're seeing in the reaction to the markets, given this had been largely priced in, KG?
Yeah, I would agree. It's been largely priced in. I think the market now is trying to figure out when we are going to see economic data kind of hitting the wire again. And that could be another week or 2 weeks here. When you're kind of looking at the issue, especially when you're looking at the jobs report, it's a survey-based data set. And so a lot of these members of the BLS will need to go back to those survey respondents and really ask them not only what's happening in November, but also what happened in October, and then also try to get a revision for September. And that could actually create a little bit of skew or inaccurate data, to say the least here. So I think the market right now it's a buy the rumor, sell the news type of an event. We are seeing the market a little bit heavy here today. A lot of that's Mag 7 names as well. But we have at least pushed this problem back at least till January 30th. Let's see if it's going to be another issue again around that time. It will be a little bit of a different dynamic, though, because we will see SNAP benefits paid out through the fiscal year of next year, as well as some other programs, veteran affairs, things of that nature. So it won't be as aggressive in the event that we will see another shutdown, or potentially could see another shutdown. So once again, buy the rumor, sell the news. I think the market's looking for the economic data and also looking at the Fed speak as well. If you actually look at we had a lot of Fed speakers yesterday, and we're pretty much split there when it comes to the December rate cut. And I think that's probably causing a little bit of angst in the market, especially when you're looking at the yield complex.
Yeah, I thought Raphael Bostic's commentary was largely sort of in line with some of the more hawkish commentary we've heard coming from some of the Fed members. Obviously not a voter, but certainly interesting as far as, highlighting or at least citing the concerns about inflation right now, which is not really where the emphasis is. But we will be hearing from a number of other Fed speakers, Daly, Kashkari, Hammack, and also Musalem today. So we'll be combing over some of those remarks. But in the meantime, you mentioned the data. I mean, we're likely to get the September data soon, but there's a huge question mark over October because it probably hasn't been collected. So what does that mean for the market seemingly flying blind, and what happens in December come that Fed meeting?
Yeah, I think you're still going to see the market really focus on the ADP data and the trend within that data set as well. We still have a lot of private data from Indeed.com and things of that nature that we can kind of get a sense of how well the labor market is really holding up. And kind of going back, we usually also see a revision for previous data sets as well. So it's been so long, that revision could also be a little bit distorted, because then you're asking people to remember 2 months back. Sometimes people don't remember that far back when it comes to their labor situation. It sounds odd, but that is actually something that we have seen in past shutdowns here. So you're going to probably have to discount the near-term data when you're looking at the labor market, maybe not so much when you're looking at the inflation data, when you're looking at CPI or PCE, just because that's a little bit more, a lot easier for us to be able to track there. And that probably could be a little bit of a headwind as well. If you're looking at the Fed members that are speaking, they're concerned about services inflation not really decelerating in the fashion that you would like to see it. And then also the uncertainty when it comes to policy could also create maybe a little bit of volatility when it comes to economic data for next year as well. So I think it's going to be a little bit of a headwind when we're trying to get the landscape or the mosaic of the market. But I think you still have to focus on the main components that have been driving the market higher over the last couple of months. That's been communication services, that's been technology, that's been, for the most part, financials. If we start seeing one or two of those sectors really starting to crack, regardless of the economic data, that's going to make it a lot harder for equity markets to advance.
Okay, we'll be watching as far as the market reaction to all of that. And just switching our gears to the commodity space, I see that oil is actually picking up some steam now after tracking lower this morning off the back of some of these rising crude stockpiles, at least the data we've been getting. More inventory data out today, I believe, at noon Eastern. We've also had OPEC Plus expecting a slight surplus there, so perhaps pointing to maybe more sort of supply glut concerns come 2026, which seems to be a bit of a change of tune. What do you make of all this commentary and this data, and how things are looking as far as the price reaction today?
Yeah, yesterday we actually had a lot of bearish data when it came to the oil market and just the energy markets as a whole. Obviously, we had the IEA kind of raising their expectations when it comes to global demand and extending that out over the long term. But obviously, we will have maybe some near-term supply gluts. And I think OPEC actually did highlight that within their report, that they are actually expecting that potentially in 2026. What also is happening in the crude oil complex that we have to be mindful of, we have been in this backwardation, or basically just meaning that near-term prices were actually priced priced higher than further dated or longer term contracts. So that is something that is called a backwardation. That just shows that there is demand, near-term demand in the market. We are now basically flirting and actually have been going back into a normalized or a contango market. That also then kind of signifies the fact that storage value or storage prices are going a little bit higher. We do have an inventory glut in some respects. Demand has been lackluster to say the least here, but a lot of oil traders are very optimistic. When we start having these type of dynamics being priced into the market, usually you will see producers are actually starting to constrain supply, and in that constrain, that supply constraint can actually stabilize prices and move us a little bit higher here. So overall, technically speaking, we're still in this downtrend, still making lower highs, still making lower lows, but a lot of the negative sentiment has been priced in here. And let's see what actually happens in 2026. I mean, if you look at the trajectory right now, a supply glut would not be a surprise, but if we do have this resurgence of AI demand when it comes to energy just in general, moving some of those raw materials, you can see an increase in diesel demand as well. That could actually push prices a little bit higher. We also have the seasonality effect for winter as well. We consume less in the winter time, so that usually does push prices lower. So for the most part bearish, but we're trying to hold this $40 or $58, $56, $58 level. If we are able to do so over the next couple of weeks, maybe we get another bounce to the upside.
Okay, checking out the energy patch and staying with commodities, let's shift gears to what we're seeing in metals. It looks like gold and silver taking a bit of a breather today after a couple of sessions of a nice rally there. In fact, silver outpacing gold and platinum in recent weeks. Just talk us through what you're seeing here as far as that trade is concerned. No doubt this has all got to do also seeing copper is actually higher today, the little bright spot amongst the bunch on some of that demand for some of the AI products, also renewables too.
Yeah, definitely. So for silver, we did actually see prices advance to around $54.40 for the active contract overnight. We have actually seen the commodity actually sell off here, down about 0.5% so far in the session. You really don't want to see this candle set up. I mean, we obviously are testing new highs here, but if we actually have this reversal candle, you can make the case that silver does try to pull back here a tad bit. I think everybody actually over the last 24 hours has been shocked regarding the silver trade, but it's really not that complex. I mean, we have reclassified this as a critical mineral moving forward here. That actually does change the demand complex here in the United States. And we already know that there's a supply deficit that's in the global markets as a whole. I mean, silver is one of the harder metals to actually process right now. And so you are seeing some optimism there. You are seeing some retail buying stepping in here, but not a surprise that we are seeing this push over the last couple of trading sessions. I think that's mechanical in nature. And do we get a breakout and move higher? I think if you're an equity bull, this is exactly what you want to see. Silver doesn't move higher because of economic concerns. It moves higher because of economic growth as well as higher inflation. And this is going to be a big input metal when it comes to electronics just as a whole. It's in around 90% electronics. So nice push to the upside, seeing a little bit of a breather when it comes to this neckline here around that $52, $53-ish area. Let's see if it has enough to move a little bit higher here. MACD is saying that it does.
Great stuff as always, KG. Thanks so much for helping us get across some of those stories today.